Hi everyone, it's Jack back here with another video. Today I'm going to be doing a stock analysis on Roblox that just recently released its earnings report about an hour ago for the second quarter. The video's games maker and of course the maker of the Roblox game or gaming platform world if you want to call it. It's now a $28 billion company. It's come down from a 52-week high of $141 when it was valued at a price sales of well over $40 in that ridiculousness of the back end of last year. Come up from a 52-week low of 21, so if you'd have bought then, you're on a nice 50% return. However, on the earnings release right now, you're looking at a 20% decline from the stock price of $47. It's down 52% year to date. This is not a stock that has done particularly well for shareholders over the last year or so. It's down much worse from its 52-week highs, and it's looking at getting worse. This is not a business that's firing on all cylinders. So let's dig a bit deeper into the Q2 report and decide whether this is a buy, sell or hold based on the future outlook for this business and how it's doing right now and its valuation. So first of all, getting into the report a bit, trying to figure out why this stock is down nearly 20% after hours. On the revenue, on the surface, it actually looks okay. Significant deceleration from 2021's numbers, but that is kind of to be expected. 2021 obviously had a huge pandemic boost. They were recording 100%, greater than 100% revenue growth, and this is just an enormous pull forward of users because people didn't have much else to do in 2020 and 2021. It's kind of expected. They got fantastic growth here, and they're continuing to build on this in a way. In revenue terms, $591 million for the quarter. That's up 30% year over year, up quarter over quarter as well. They had a big dip in the previous quarter, but before that, they were on a steady uptick. And honestly, I'm not really seeing that many problems with this revenue. Of course, there's deceleration here, but that is kind of to be expected. When this company's trading at a price sales of probably around 11 right now, that is objectively expensive for this sort of revenue growth, in my opinion. However, there is a large runway for growth if you believe the long-term thesis for this company. So I'm not really seeing the problems here. Maybe it's on the booking side. So the booking side of things, booking is essentially the in-game currency. So they can't really count that as revenue until it's been spent on the platform, because just holding Robux or whatever currency on the platform isn't actually spending it. It's kind of just like it being in the bank. You're just converting USD or pounds or whatever to Robux and holding it there. And for this quarter, it's actually down 4% year over year, which is quite a worrying sign. $639 million. It would be nice if it was billion. $639 million. Basically flat quarter over quarter, up slightly, down massively from Q4 2021. And generally, this has not really gone anywhere since the late 2020 and mid 2021 numbers. And when you look at what it did from 2019, there was obviously a massive pull forward from the pandemic, as I'm going to keep saying, but we'd really like to be seeing some growth here. And aside from the Q4, we're not really seeing anything. This is definitely concerning. If bookings aren't going up, then spending on the platform is going to struggle to go up over the longer term for sure. The most bearish part of this report for me, clearly the biggest problem, is that the daily active user numbers actually declined this quarter. Still up 21% year over year, but declined from the previous quarter. This is the first time this has ever happened for Roblox, and this is 100% concerning. You can see this graph previously was just a continued uptrend, and while they got a huge boost from the pandemic, the middle of 2020 carrying forward, they were still growing, even in the Q1 2022. So 52 million users is nothing to sniff at, considering this is daily active users. That's a lot of engagement on the platform. However, this is going in absolutely the wrong direction, and they need to right this ship quickly I don't really know what the plan for the business is to right this ship, but this is definitely concerning considering the amount of money they're pouring into the platform, that the daily active users is going in absolutely the wrong direction. And this is probably why investors have been scared away in the after hours, down nearly 20%, because the revenue is a little disappointing, but sort of was on the horizon anyway. The bookings is certainly concerning, but I think daily active users is probably the most concerning, down quarter over quarter, although the year over year numbers kind of hide that. What could have been a saving grace for this quarter is if daily active users are down, you can kind of live with that if hours engaged are up, but that is not the case. Up 16% year over year, but not enough to compensate for the daily active user loss. It's down quarter over quarter from 11.8 billion to 11.3 billion, which again, nothing to sniff at. They've come a long way in 3 years. You see from Q2 2019, they had just 3 billion. That's an enormous pull forward from the pandemic, and this is clearly a stock that benefited massively from the stay-at-home boom, but it seems like it's starting to go into a decline which is very, very worrying, particularly at this company's valuation. And there's been a clear peak in all of these metrics in Q1 2022, and it's on a downtrend. Something I admired about this business for a long time, even though it's a rapidly growing company, they were free cash flow positive, or not tons, 8.5 million in Q4 2019. During the pandemic, they experienced a lot of pull forward, as I keep saying, and that free cash flow number went a lot higher. Nowhere near its valuation. During the pandemic, this was something like a $60 billion company, and it's recording quarterly free cash flow numbers of around 150 million. So it's still, over 100 times price free cash flow. But I appreciate when growing companies are free cash flow positive early and build upon this, and it seems to be going the opposite way now. $57 million free cash flow loss. Absolutely significant. Stock-based compensation has dramatically increased this year. And I'm just kind of seeing a lot of signs, a lot of red flags here that make this a far less attractive business than it was even a year ago. Now, one bad quarter is not the end of the world. There have been many companies in similar fields, like social media companies, where daily active users have declined for a couple of quarters and came back. But I just don't really feel the need to cut Roblox a lot of slack when it's trading at price sales of 13. Now, this is old data because it's going to drop 20%, but let's call that a price sales of 10 or 11. That is an objectively expensive company in today's market. That is for 30% revenue growth, decline in daily active users, lack of free cash flow positivity, so basically all the rest of them numbers are going to be highly inflated. I find it very, very hard to give a company that is going in this direction the benefit of the doubt. I don't really see why investors should. I completely understand a 20% drop, because daily active users dropping from this platform is certainly worrying. I've had a long-held belief that video games like this, over time, they just get less users, unless there are, of course, one-offs. Minecraft, for example, but it's kind of an aberration. I think that's the exception to the rule, right? But over time, new video games come out, and Roblox is trying to buck this trend. But I think people get bored, especially kids. They get bored of certain things, they move on to the next thing. I've had a long-held belief that Roblox would go this way. I didn't think the metaverse play was really all it was made out to be. I think this is a company that is grossly overvalued, even now at $28 billion in market cap. It's doing 600 million in revenue for the quarter, which is respectable, but it's still very, very expensive in today's market and an inflationary environment. I would not feel comfortable investing at these valuations. Overall, I think I've made my position pretty clear. I think it's an absolutely justified 20% drop. I think it might even go further tomorrow. I don't particularly see this as a buying opportunity. Perhaps over the long term this company can pull it back, but I personally have a lot of skepticism. I'm very bearish on Roblox and don't believe this is a buy right now at all. And if I were owning this stock personally, I would see this as perhaps a sell indicator, because I'm just really not confident on the long-term success of this business. This is an absolutely putrid quarter, and I think management are taking this company in the wrong direction. However, that's not to say over the longer term this can't be a successful business. It's just I think there are better stocks out there right now, particularly when this company is trading at such a high valuation. It's going to come with inherent volatility, and I would be worried holding this stock. It would not make it easy to sleep at night, and for that reason I could not possibly endorse holding this stock. Now, of course, I'm not a financial advisor, so you should do your own research and due diligence, not just listen to what I say. Let me know if you think Roblox is going to be a big win in the long run. Let me know if you think it's an absolute stinker. Comment down below what you think. Like and subscribe and enjoy the video. I'll see you next time.